Hello, everyone. This is Danielle. How are you doing today? All right, I'm back. Thank you. We have a bunch of pictures being posted in the trading room. Thanks, Skydiver Jim. I had a great time bringing my stock market workbook for kids to the money show. That was pretty cool. I'm trying to get a box sent there to the live event for all the VIP members in Austin in November. So hopefully it'll get there in time. And we can hand out some to those of you that are going there. Let's see. Danielle, thoughts on IBM, Google? Definitely let me know if you have any requests, and I'll go over those throughout the course of the session. Here's a picture for those of you that are on the live stream. Let's see. ACHR, Joby. Yes, we can go over those. Tesla, please. Yeah, we'll definitely go over that. The market's getting a little bit hammered today. I think that overall, everything has to do with Netflix earnings. So, the biggest risk that we had on the table was definitely earnings today, and that's also the biggest risk that we have on the table for tomorrow. So, we have Tesla earnings up after the bell, so we're absolutely going to cover that. And if you look at the way that the overall market has traded, I mean, we've had some pretty significant negative ticks to the downside. So we've gotten ticks down into these negative levels multiple times. We even had a negative 1558 tick at one point. Couple ticks down into the negative 1,000, but a lot of ticks down at the negative 600 range. So that just basically means that there's a lot of selling. More selling than buying. If you look at the vol spread, we've had consistently bearish pressure. So we just had continued selling, continued selling, continued selling. If you look at the put call ratio, the put call ratio has been continuing to climb higher. So you can see that there's, a put call ratio that was all the way down into the 0.55 range, and it has climbed up to 0.7, which is not, it's not really that high, but it has significantly increased, I would say. Well, maybe I shouldn't even say significantly, because going from 0.54 isn't actually that significant. But, it has been continuing to go higher. The fact of the matter is that 0.7 is still pretty low. So for that reason, the market could still keep going lower for several more days until the put call ratio gets up to 1. If you look at the VIX is up above 20 now. So we do have a little bit more of a volatile environment here. But, the VIX has been pretty low. So looking at the looking at the indexes here on the 5-minute chart, you can see that the S&P is down almost 1%, which, is not really that significant, but with the way that the market has been, which is very strong, it does make an impact. And you can see that it's just been a regular stair-step pattern lower. I would say that the most critical thing right here is the fact that we just broke through the key psychological value at 6,700. So breaking a key psychological value at 6,700 there is really important, because generally when you break those key psychological values, that means that we're going to keep going lower. Now, I will say that it has bounced and it has climbed up above there ever so slightly, 6708, 6709. But I would say overall, I think that this is a pretty weak day. I don't see any signs at all of buyers coming in yet. Typically on days like today, we do try to do like a short covering rally at the end of the day. But with the put call ratio so low, with the volume so negative, with the ticks so low, I don't see that yet. It may come through the last half an hour of the day, but it's way too early to say. So, Danielle, you're not coming to Austin. I cannot come because I have two small children that both have severe allergies and nobody is able to watch them. And my husband has to go. So we both can't go. The reason why I could go to the money show is because, my husband came with me and he watched the kids while I was working the whole time. But when we both have to work, it's a little problematic. I will watch them. I will take you up on the offer. I can come with the children. I mean, could show you pictures of the children running around at the money show. I miss you in the room. Oh, thank you. What tweet smacked the markets today? I'm tempted to just come and just, say hi with the kids because I didn't really think this through that I'm going to be stuck here with all the children by myself while my husband's gone. So now I'm thinking that was a really bad mistake and I should just go anyways, even though I can't really do anything. Because now I'm going to be trapped here with all the kids for like 4 or 5 days by myself. Was not thinking this through. Anyways, looking at the NASDAQ on the daily chart, I mean, I think this is just about Netflix earnings personally, because once you get into Magnificent Seven earnings, if you're just kind of in this situation where the market has been extremely strong. There's been no reason to sell at all because everything just keeps trading higher. But then what happens is you have one of the Mag 7 stocks come out, which is Netflix. And I'm really glad I didn't do that neutral iron fly that I was looking at. I was looking at this one yesterday right before the close, and it had an $83 expected move. And I was looking at that and I was thinking, man, that's really high. I could sell some premium here. I could get some vol crush. And I was about to do it, but then, the market was about to close and I was looking at the hot zone and the hot zone was saying that the expected move was like a 7% move. And this is what saved me, to be honest, because I looked at this and I was like, how many times has this ticker moved more than 6 or 7%? And 4 out of the last 8 quarters, it has moved 7% or more. So I actually did not pull the trigger on the neutral iron fly. And it's a good thing because I would have lost like $3,000 on it. So I didn't trade Netflix earnings. That was the one thing I was thinking about doing. The initial gap lower was 7.9%, which was $98. So that was, a good $15 more than the expected move to the downside. But what is more significant is that now it's down even more. So now it's down 9.92%, which is $123. So that's a really significant move. And it's just significant for the market overall because this is the first major tech stock to report earnings. So what happens is when these kind of moves happen, the market just gets a little bit jittery and it's like, oh no, should I take profits on my OCLO? Should I take profits on my SMR? Should I take profits on my RCAT? And so everybody just starts selling. And as we know, the selling begets more selling. So when you're looking at all this, it's just one of those things where this is kind of what can happen for Mag 7 earnings. And hopefully Tesla doesn't make it worse today, but it very well could. So if we look at Netflix and just say, okay, what do you do with it here? Well, first of all, whenever you have a ticker that's down like 1.5 times the expected move, it's generally going to keep going lower. In this case, there is one little small sliver of hope, which is the 200 simple. So the 200 simple is right here at $1,112, and the ticker is clinging to that level. So, it's possible this holds, but I'll just say overall, this is a pretty big drag on the market. When you look at Tesla, This one right here. Now, I would say the move today doesn't really matter that much. I would say that it's more related to the Netflix move. Typically, like I said, when one company comes out and reports earnings and it's bad, people get a little bit more jittery. I think that the Tesla setup overall looks really good. You have this nice squeeze, you have a cup and handle pattern, it's up above the 21 simple on the daily chart. I mean, there's really nothing too much to complain about here. Last quarter, Tesla was down. So it was down 6.8%, which was a little bit different because, previously we had 7% up, 5.6% up, 14% up. Yes, this is the earnings hot zone. So if you look at Tesla overall, I will say that it has slightly more frequently been up rather than down after earnings. But last quarter it did kind of take a hit. So with Tesla, what I normally do is I'll either make a directional bet where I'll say, okay, let's put a butterfly on. What would the price target be with a butterfly? For example, with Tesla trading at 430 and the market maker expected move at 27, that would align pretty well with a $450 price target. So I could see doing something like a bullish butterfly at 450. As far as a downside butterfly is concerned, 400, I would say. So, sometimes I'll do out of the money butterflies in both directions if I'm not really sure. It's like, well, could trade up into 450, 460, could trade down into 400. Let's just see what kind of setups we have right here. Sometimes I'll do it both ways. If you do it both ways, one of the ways is going to lose money. You can't make money on a directional butterfly to the upside and to the downside at the same time. Like, it just doesn't really work like that. So the only reason why you would do it on both sides is because you're just not really sure. To be pretty clear about this, I mean, whenever I make an aggressive bullish bet, it's because the company just goes higher after earnings over and over and over again. This is not the case with Tesla. So, I don't really have the stats on my side at all. That's why I'm kind of saying, okay, well, maybe you could do to the upside and to the downside. Oh, and by the way, 6,700 is breaking again. So that is no good. Probably going to get a big flush here. All right, 6,700 is breaking with negative 752 on the ticks. In normal cases, Netflix shouldn't be down so much due to tax issues in Brazil. Concerns me that regardless of Tesla earnings, the market will see the negative and sell off. Yeah, I mean, I actually didn't read the full details of the Netflix earnings report, so I can't speak to that too well, actually. But what I think was the most critical here was, I mean, they missed like by quite a lot. Let's see. Let's go back to Netflix. And if they break that 200 simple, whoo. So they were estimated to earn $6.88 and they made $5.87. I mean, like, that's a huge, huge miss. So Brazil issued them back taxes, which ate all their gains. Oh man, that's a pain. Did you see anything about churn or cancellations or higher than average cancellations? Because I saw this morning Disney Plus is having a lot of cancellations due to the whole Jimmy Kimmel debacle. And I was wondering if that hit Netflix as well. It will all get reversed in Brazil one-time event. Well, that's good to know, but unfortunately, if you look at the whole market today and the way that it's taken it to the chin, is it gonna recover? It may if Tesla's doing well, but it also may not. So, let's look at the levels. Is Netflix a buy here? I do own Netflix stock. I think that it could be a long-term buy. If it holds this level, I would at least want to I mean, I generally like to at least give it another day because if it's gonna continue lower, it's gonna break tomorrow and just flush and roll over and die. But if it can hold that 200 simple and bounce from there, then I could see it as a long-term buy and potentially even a buy for a trade because it has that daily squeeze. Anytime you have a squeeze going into earnings, um, the ticker can make a pretty big move after the earnings report. Okay, so let's go back and look at Tesla for some trade ideas. Okay, so you're on the 21 EMA, you have the daily squeeze, you have the 195-minute squeeze, you have the 1-hour squeeze, you have the squeezes all over the place. I still have the TSLL. So this is going to be the 2X ETF. I just bought this. I was looking at my son's portfolio yesterday, actually, and this was like one of the best tickers in his portfolio, along with RGTI. Well, maybe RGTI is down quite a bit today, so we'll take a look at that one. But these two have been kind of the best winners over the course of the past 2 or 3 months. So TSLL, I mean, I still think that this is a viable way to trade Tesla, especially because you don't have the vol crush you have to deal with. If you look at Tesla itself, the targets are definitely going to be like 450, 460. And then if you did get a greater than expected move, you're looking at 475 or a break below 400 would be down into 375. So when you go to set up your trades, those are the things to keep in mind. We have 122% implied volatility. Oh, we have some buying coming in, plus 800 on the ticks. Ding, ding, ding. All right. So a lot of the time I will do a neutral iron fly. But let's go ahead and see what percentage that would be. See, $27 on a $432 stock. So the move that's being priced in on Tesla is a 6% move. And if you look at the earnings hot zone, you will see that last quarter we had 6.8%, 7%, 5.6%, 14%, 8.5%, 12.6%, 8.7%. So that already just rules out the neutral iron fly because the market maker move that's being priced in is much smaller than the moves that Tesla normally experiences. So we're going to say no to the neutral iron fly. Not going to do that. So then that leaves us with, okay, can we do like a bullish butterfly? Maybe at 460. You do have more open interest at the 450 strike. But you could also go through that strike. So, just kind of have to decide. Let's see if we did a butterfly like this. So you could do something like a 440, 450, 460 butterfly. In this case, that's only 80 cents. So I actually like that. That's a pretty good lotto trade. It's $10 wide. It's only 80 cents. It's a way to trade Tesla in case Tesla trades the upside. I like it. Let's see if we did it at 460. Just give us a little bit more room. So $20 wide is going to bring your cost basis up into $3, which is pretty high, I would say. But at the same time, I mean, it gives you a $20 wide butterfly. So you would have plenty of room from 440 all the way up into 460. If you traded higher than 460, that's where you would start losing money. But I do think that overall, this is a pretty good idea. Um, I mean, I like it. So let me save that. And then let me look at the downside trade. Everything is freezing. Come on. I'm going to have to tell you guys some stories until this thing unfreezes. All right. So when it freezes like that, it just means that there's a lot of volume right now. There's a lot of volume coming in the market. A lot of people looking at these tickers. Okay, so if we did the same thing, 410, 400, 390 for 87 cents to the downside, that would give you some downside protection in Tesla, but that would only be if we had a move at the expected range. If it got destroyed like Netflix is doing, then this trade would not work. But I do like this idea overall. You can make it a little bit wider. You can do 420, 400, 380. In this instance, you have a $3.38 trade. So it's a little bit more skewed to the downside than it is to the upside. I wouldn't really recommend doing the $20 wide fly on both sides because then you're going to have, at least $7 of risk per contract. I guess it depends on your overall risk parameters. Let's see if we can make it $15, just kind of split the difference. That's not too bad. So if you do $15 wide on both sides, $2 there, I could do that. So you'd effectively have, $2 of risk on one side, $2 of risk on the other side. So I like that. I mean, I think that's fine. You have $27 expected move. I think I'm just going to do one contract of each, $15 wide. October 24th. So you're basically risking $192 for a max of 1,300. But I mean, these are earnings, lotto trades. Tick Tool showed heavy buying in the Mag 7. Tesla up $3 since you started talking about it. Well, there was a tick that came through. See if I can even get filled. Come on, Mr. Market. The thing is that on all of these down days, we've had a ton of retail buying that's been coming through. Still not getting filled. Must be a good one. Tesla earnings. I am going to is up half of the time. Your keyboard is really loud. You know what's really loud is it's my nails. I have to get my nails done. Yeah, the keyboard is super annoying, actually. All right, so I'm posting the alert in the trading room. Still not getting filled. If you own Tesla stock, do you sell covered calls against it? If so, what strike? Never ever do that on earnings. Do not. It is not a good plan. Sell covered calls any other time. Well, unless you want to take a chance of getting rid of your stock. I do not recommend. Normally with a covered call, you want to sell it like a Delta 20, Delta 30. But the problem is I mean, you could so let's just say you sold the Delta 30, or let's just say the Delta 32 to make it easy at 455. That's just barely outside of the expected move, like barely. So it's not, there's a pretty decent chance that Tesla could trade up into like 465, 470. So unless you are okay with getting called away, I would not recommend selling covered calls over earnings. If you're okay with that, then that's fine. But, just look at this Microsoft move, for example. See this massive gap up. Do not want it. Okay, so let me do the bullish side. I'm going to do it at 460. The way that I would typically say, you could trade options with stock is, like let's say you wanted to buy more Tesla shares and you were okay with getting more Tesla shares. You could sell the 420 puts for $9.25. And then let's say Tesla does get hit and it sells off down into like 410 or 400, and you end up getting the stock at the 420 strike, and you also brought in $9, then it's, that's not too bad. But I wouldn't want to risk my stock over earnings personally. If you did, I mean, you could come all the way up here. I would say it would be pretty unlikely for it to hit 480. So if you really wanted to do it, you could do like the 480 strike, maybe the 475 strike. It's just a function of, if it's worth it to you or not to have the shares at risk. Let's see, so 460, let's do 445, 460, 475. So this one's only 165. That's really not bad for a $15 wide butterfly. To open, this is the bullish take on the Tesla earnings trade. This is a lotter trade that is targeting an upside move within the expected range, just like the bearish trade. Yeah, what about the naked puts and I'd get a discount on the shares? That's exactly what I was saying. So I will and I have sold the puts on tickers over earnings if I am okay with getting assigned more shares. Because the puts are really juiced up, so you can sell those. You can sell those puts for like a pretty juiced up premium, but you have to be aware that you could get a Netflix kind of move and somebody could, want to exercise their right to those options on the other side, if you know what I mean. Okay, so here I'm going to post I'm going to post the Tesla hot zone chart. Here is a screenshot of Tesla in the hot zone. As you can see, the moves post earnings are not consistent. The market maker move is 6%, which is a lot less than moves we have seen regularly over earnings. This means Tesla will likely move more than expected. If you want to add the calls on a Tesla position for December or January, would you do it now or wait till after earnings, given they're out 2 to 3 months? I would still wait until after earnings. I personally would still wait until after earnings because it could be a pretty, you could have a pretty big move. It might be down 10% tomorrow. But you just have to know that if you do that, it could happen the other way too, where it might be up. I don't like to enter swing positions on a ticker right before earnings. That's just a rule that I have for myself. So if you ask me, I'm gonna say to wait. If you're going a couple months out, one could argue, well, it might be okay. But I personally don't really like to do that because there's just a big move on the horizon, volatility crush. I do think that Tesla is going to ultimately continue higher. I mean, if you look at the monthly chart and the weekly chart, I have a price target at 563, up at 600 almost. So, definitely a long-term Tesla bull. I have a lot of Tesla shares. My primary investing account that I have, Tesla, after this most recent move, Tesla is now my top ticker. It was Nvidia for a long time. Nvidia is number 2, and then I have Microsoft number 3. But due to this most recent Tesla move, now Tesla is the biggest holding that I have. Yeah, hopefully it's not down 10% tomorrow. I would add it if it was down 10%. Congrats on the new book. Thanks. Yeah, it was fun making it. Now I'm going to be making many more now that I know how to make a book. I'm pretty excited about that. All right, so I'm going to go ahead and get to the requests. If I missed your request, go ahead and ask it again. I'm going to try to scroll through the chat here. I know I saw Google. Let me see, what else did I miss? QUBT, ETHA, SMR. Yeah, we can look at those. ACHR, Joby, okay, IBM, Google. Okay, so I'm going to try to get to those. I just want to address these first of all. So first of all, the short squeeze tickers as a whole, a lot of those requests are about the short squeeze tickers. The short squeeze is a lot of fun on the way up. On the way down, it can get absolutely trashed. So for that reason, whenever I'm in any of these kinds of names and they start falling, I get out like immediately. I know that you guys have seen me before where I've been in a trade and I get out and then it'll go down and then a couple days later it'll take off and you're like, "Oh man, like why did she get out of that?" But this is exactly why. And the reason why I'm a little bit quicker to get out of the short squeeze tickers is because when they lose momentum, they get completely and totally destroyed. And I don't want any part of that. So, there are definitely times where I'm a little bit too jumpy, but it's because when I'm trading these kinds of names, I'm already doing something that's pretty aggressive and I don't want to get destroyed on the way down. So, okay, hello. For example, with this one, it's coming back down to where it came from. So the next area of support is going to be at the 50 simple. It's going to be at 105. With these kinds of things, because they're heavily shorted, The reason why they're going up is because buyers are coming in, there's incoming volume, people are excited about it, and then the short sellers, they're buying to cover to get out. But the short sellers don't have to buy to cover when it's going down. They're like, "Oh, thank God, finally, I'm not getting completely creamed anymore," or they did get creamed and now they're coming back in and they're selling it and they're getting their revenge. So, with any of these names, every single one of them that's getting hammered right now, whenever they shift, they break the low of the high bar, they have a day where suddenly they're down 5, 6, 7%. I am out. I flip that out and I am out of here. MP, this is an example of a ticker that I honestly screwed up. I was in it, I was long, everything was looking great, but you see there was a wick right here and it failed on the breakout. It had this big down day right here. It doesn't look like a down day because it's green, but the reason why it's green is because the candle is up above the moving averages, not because it was an up day. Then it broke down below the 50 simple 1, 2, 3 days in a row. It really looked like it was just going to get hammered. And, generally when something breaks the 50 simple, it gets hammered. In this case, this one did reverse and I had a lot of FOMO because I was like, oh no, I got out of it and it just rallied all the way up to $100 a share. That was tragic and it was sad. But at the same time, the reason why I got out when it failed here and it was reversing is because of these kinds of moves. These kinds of moves where these momentum stocks just get completely hammered are just not fun to be in. So, for all of these that you're asking about, every single one on these short squeeze names, when they start to shift, and you can see it starting to shift on the lower time frame chart. Like it's green, it's continuing to go higher. You have high volume, it's making new highs. And then all of a sudden, you just have this break. You have the break of the low of the high bar. You have a big candle. You have a shift where the candles fall below the moving averages instead of being above them. And once they get below those moving averages on like a 78-minute chart or a 1-hour chart, it is really hard to shift this trend around. You can see that it tried right there and boom, just gapped down and failed with the 1-hour squeeze firing to the downside. So all of them, and what's hard about it too is like a lot of the times it will happen with a gap. So with Joby, for example, this was a gap overnight and it tried to recover, but this was the spot to get out. When it tries to recover like that and then it just rolls over, it's like, get out. Tries to recover, can't do it, rolls over again. I personally am not in. Well, actually, that's not true. I have 2 of these on right now that are getting a little bit hammered, SoFi and CRWV. So we can go ahead and look at those. They were looking great until today. Well, CRWV actually the last 3 days, but I'll look at that in a second. Whenever they break the 50 simple like this, that's not a good sign because they usually just careen lower. For today in particular, it can happen where you just get one bad day and then everything recovers tomorrow. Fingers crossed, if Tesla goes well, that could be the case tomorrow. But if tomorrow is a second down day, all of these names are going to be off my list until they can start gaining momentum to the upside, because when they reverse, when they break the 50 simple, they just have to be dead to you unless you're going to start shorting them. ACHR, this one, I mean, you can see on the lower time frame chart, I mean, same pattern. It made the high, reversed, went from green to yellow to red. You can see now it's below the moving averages. So that one's definitely dead. That actually looks pretty good with IBM. Earnings are today. Let me go back and look at that one. Google and Microsoft, I think both look really good. You have a really nice daily squeeze. potential move going into earnings. My issue is just that we're pretty close to earnings on both of those now. I don't know that I don't personally like trading the 1 week move going into earnings because the issue is that once other companies start reporting, it just gets really volatile. So for me personally, I think Microsoft and Google look great. I don't think that I'm going to do anything with them here. I own both of them in my long-term stock portfolio, but I mean, I don't think that I'm going to do anything with them at this point because I like to trade the 21-day move going into earnings. I do not like to trade the 1 week move going into earnings. The move is not as big, it's a lot less consistent, and it can get hit pretty hard by other earnings reports that are coming up. SMR, with this one right here, this one's getting hammered too, down 12%. So this is just the worst. When it breaks the 50 simple, that is the worst. That's when you get the high volume selling. That's where people take stops. Um, I will try to hold swing names if they're holding up above the 50 simple. But once they break the 50 simple, like it's just dead to me. This one is the same as all of the other ones that I was talking about because it's a short squeeze name. Again, when you lose momentum, you have to get out because the reason why these are so good is because the short sellers are buying to cover. The second that they start reversing, that is gone. It does not exist anymore. So the reason to be long has evaporated. Yeah, this one too. So, and also, if you want to change sides on some of these, once they break the 50 simple, that's generally a really good spot to short. So you can see that this one was on the 50 simple and it was kind of like, okay, maybe we could buy it. It's on the 50 simple. It has the squeeze. It has earnings coming up. But then you see the next candle, boom, breaks. Then it breaks the 100 simple. I mean, at that point, it's going down to here. So, those are, I would say, all of the short squeeze tickers are just kind of dead right now. Let me see. I think the market makers are offline because it's been difficult getting fills for the last hour. Options chain is off. I've noticed that a little bit too. I'm not really sure what's going on. You mean ChatGPT will be making many more books for you? I have to tell you that trying to use AI to make the books I've been working on took me way longer than just doing it myself. I did start out trying to use AI and quite frankly, like trying to then edit and fix everything took me so much longer than if I just would have like done it myself in the beginning. So, um it didn't really work very well. Eh, but I learned all kinds of skills. And I also don't use ChatGPT, I use Grok. SMR is trying to fire back to the upside on the 5-minute chart. It's dead to me. Dead to me. Hey, Grok, read this book and make it 10% better. I'm going to be a #1 seller. The media should be promoting your book. So I gave a copy of the book, the stock market workbook for kids, to Charles Payne, and he was like, "Oh, this is awesome. This is great. We need to talk about this." I was like, "Yeah." So I don't know. The media is not gonna promote your book unless like they see it and they like it and they think it's cool because it's, their name. So anyways, I gave it to him. We'll see what he says. Ethereum, let's see. So that is not looking very good. Again, a break below the 50 simple, squeeze firing to the downside. The 50 simple breaks, guys, I'm telling you, are just no good. If you're long and something breaks the 50 simple, it is dead to me. SoFi, I'm not very happy about this one because I was long this ticker the whole time I was at the money show. Um, and everything was fine. Everything was good. It was still in a squeeze, still above the 50 simple. It was positive. It wasn't losing money. It just wasn't taking off. I think yesterday it was up slightly, and then today it's like getting hammered. So this position is the one that I'm going to have to make a decision on. The earnings report is on the 28th. I feel like I'm just repeating myself, but if it breaks the 50 simple, it's dead to me. Right now, it's at least bouncing at that level, so it could be worse. Today's the 22nd, and the long calls I have expire next week. So it's just one of those things where it's like, well, I have Thursday, Friday, and Monday for it to recover. And if it doesn't recover by then, I'm going to have to take a loss. So the trades that I had on when I was gone, which, I didn't have very many trades on because, like I said, I don't like to have a lot of trades on when I travel, are SoFi. The setup itself still looks fine. It doesn't look as bad as some of the others that we have looked at today, but I mean, it's also not great. It's down 6%. So, but the setup itself, it still has a trend, still above the 50 simple, still has a squeeze, still has bullish momentum. It could definitely be worse. Okay, this one's losing momentum. GTFO has a 195-minute squeeze. You can see that it broke the low of the high bar. The thing is that these kind of stocks, you have to think about the fact that there are a lot of people in here that were making a lot of money, and those people do not want to give back all of these gains after this extremely phenomenal run. This stock was down at $8 and it traded to 45. So once the momentum runs out, you have people taking profits. Then you also have the short sellers coming back in for their vindication. Perhaps we should use your short squeeze list to buy puts when they crash. Yes, good idea. AI should only be used to help revise and edit. So that was actually something that I did use it for. So I was paying an editor before, and the editor was like pretty good. But then what happened was I ran it through AI, and the AI found even more errors. And I was like, wait a minute, I'm paying an editor, and the editor did not even catch all of these other errors. So why am I doing that? So then I started using AI and just running like every single page. And I would say, hey, check this for grammar and punctuation. And it would literally explain, hey, you should put this here because of this and whatever. So I did actually use AI for all of the editing after, two humans, and it still found even more things. So, let's see. Here is my short squeeze watch list. Keep in mind, the short squeeze gets hammered when the market falls. The short squeeze list, this could provide downside opportunities now. Okay, so I'm going to share this. See if I can try to get to everything. UNH if possible. Let's see if I have any more questions. Can you get the German version of the book? I don't think so. So this is the first time I have published a book, so there's a lot of learning process here going on. So I'm not really sure a lot of the questions, but I did get it on Amazon. So this is what it looks like. I haven't figured out how to get the interior pictures on there, and I haven't gotten my author page up yet. So I did get some of the interior pictures down here, but as you can see, they're very small. So now I'm trying to figure out how to make them bigger. This is just a big, this is a major learning experience for me. But the book was a big hit at the money show, so that was cool. To help the children learn about stocks. CRWG, the 2X CRWV, Beyond Meat. Let's look at those. PLTR. Yeah, here's the link if you want to check it out. Thank you. PLTR looks pretty good. I mean, it's, it has a wick and it's bouncing. It could be worse. It's only down 4%. It's not down 15. You have buyers coming in. This is definitely one that I would look at to buy the dip. But the thing is that it has earnings coming up. So let's say that it rallies tomorrow. This would be one of the first ones that I would say, okay, we could come in and buy the dip on it. IBM earnings. I haven't traded this one for a long time. Let me see. I would not buy, I wouldn't buy any of the tickers on the short squeeze list right now, including MP. Because if the market's down again tomorrow, they're just going to get hammered even worse. Yeah, let's see. So, I mean, this is just not consistent. I like to trade tickers over earnings that are consistent. With this ticker, half the time it's up, half the time it's down. More recently, it's been down, but yet it's in a bullish trend. So it's like, I like to trade tickers that are in a bullish trend to the upside, but you can see it's gotten hammered 2 quarters in a row. So it's like, I don't really want to buy it. You could make a lotto trade up into 300, which is a key psychological value target. But the post earnings 8-day average isn't even bullish. The moves are not consistent. You have a 1.5% move and then you have a 7% move. So it's just, I wouldn't trade that one. I don't see an edge in that. AMD, this isn't a short squeeze name, but it is one of the names that has been a big momentum player. And it's finally pulling back. Anytime you have the big momentum names that start pulling back, just take your money and run. The squeeze has already, it's lost momentum. It's run out. Just say thank you, Mr. Market. United Healthcare. And by the way, the ticks are starting to go positive again, plus 546. We might get an end of day ramp here. I just don't know what to do with this. Earnings next week. I mean, I can see on this chart that people are trying to come in and buy it. It's not a strategy that I like to use. Buying tickers that have gotten destroyed. It's just not what I do. I can see other people are doing that, but I mean, do you really want to try to buy it when it's gotten hammered 4 quarters in a row? I mean, I don't want to. We need a simpler room for kids and some of us oldies too. Yeah, my kids were at the money show. Had Leo passing out flyers and Luke was like going up and down the escalators over and over again. It would be great if they would learn a little bit more. Leo sat in my class even. And I tried to ask him at the end, like, hey, what did you learn about the stock market? And he didn't really have too much to say. I was like, come on. You can do better than that. He's like, "I don't need to trade stocks because you're trading them." I'm like, "Yeah, that's not the attitude that I was going for here." Now I'm wondering where I went wrong. Escalators can be very dangerous. Yes, I was with him the entire time. We just went up and then down and then up and then down. Let's see. Yeah. If you cover Amazon, when do your kids listen to you anyways? Exactly. Exactly. Let's see. So I didn't go over Amazon. I'm pretty I'm pretty torn about Amazon because I really like Amazon. I think it has a great longer term pattern, but it's just one of those things that last quarter it got kind of hammered after earnings, 7.2%. It's not very good. It tried to recover, but then it failed again. It's on the 200 simple. So I mean, I think it's still in a spot for good long-term buys. Um but I just don't really see a good trade for it right here because I don't think we can do a short dated run into earnings. I don't know that I want to do a bullish earnings trade. I don't really see anything else to do with it besides just buying the stock on a long-term basis. You know what I mean? Dollar cost averaging into the stock. I already have an Amazon stock position. So I think that's going to be the main thing to do with it right here. All right. Well, my time is up. Thanks everybody for joining me, and I'll see you tomorrow.